It's April 2nd, 2014, current time 11:30 GMT. Jay Mosley here with Daily Forex Trading Outlook. The second quarter starting with a focus on the yen. This is what I suggested would be the risk coming into the new quarter, and it's playing out almost like a textbook with that 103.75 level tested, briefly broken overnight. You'll see on the chart in a second. The reason, the rationale is the consumption rate hike in April 1st, passing of Japanese fiscal year end, expectations of Bank of Japan easing. Many have it targeted for July if the consumption rate tax hike impacts the economy. If you look at a chart here, we briefly broke that 103.75 level, and we're just currently slightly below it. Back below it, that is a key level. And if you look back here going to November, except for this period here, which appears to be in the month of December to mid-January, we've been in this basically really a 101, 103.75 range since November, as I said, except for the brief thing. So that's why this level is so important. If it's broken, then we have come into that 105, figure to 50 level here, actually, or so, and that's what the risk of the market is, and that's why the market's focusing on the yen, trying to correlate it with stocks as typical, and we'll see how this 103.75 level holds. So really, you'd say 103.75 to 104, let's say, is the current obstacle on the upside. Have to hold 103.50 to keep a bid. If it goes back below it, 103 then comes in play, and that has to hold to keep it higher. So that's where we stand coming here, but the focus is going to shift to the ECB. So we'll look at the euro dollar in a second. And we talk about the ECB. This is the first meeting since over the last four, let's say, including tomorrow's meeting, where the market has not gone in with expectations of some sort of monetary ease, either rate cut, QE, or stopping sterilizing bond purchases, a litro, whatever it's going to be. Expectations are the ECB is going to stand pat, despite all the jawboning and rhetoric and so forth. So the euro's going in with a better bid into the ECB meeting, and that maybe sets up the surprise risk will be on the downside, not on the upside. The opposite of what we've seen in the last three meetings. So just keep that in mind. The ECB could, there's always a chance they could do something on the liquidity side. I think a rate hike is a rate cut is a long shot, and QE is probably a longer shot. But some sort of QE by stop sterilizing bond purchases, is a possibility, and you have to keep that in mind. If the ECB does something, anything, it might be taken as a euro rate protest, meaning that it doesn't want its currency higher and doesn't want it challenging that 140 level. So, you've got that's the risk going into tomorrow. It's going to be the key event. Then we have non-farm payroll, and that is another interesting one because Yellen downplayed the improvement in the labor market, attributing, recognizing the reality that a lot of jobs are part-time jobs. But nevertheless, the market will look at the headline. We'll discuss non-farm payroll tomorrow, but the ECB meeting is coming up. We have ADP coming out, the survey today, and although it tends to, adjust over the long term, in the short term, it seems to not to have that greater correlation with non-farm payroll. But each week, the market seems to assume it does, so it will react to ADP when it comes out. If you look at the daily chart in the Eurodollar, we came close to that 20-day moving average, 138.20. Got the average is 138.33. On the downside, key level here is down to 107.05. We bounced off last week, and we got a double bottom there. Anything in between is kind of noise. So I would say 137.50 to 80 is probably support. On the upside, obviously 138.20. Ahead of that 138.75 level, and those are the parameters coming into tomorrow's meeting. 137.05 to 138.75 are the key levels, and 138 obviously going to set the tone of the euro dollar going forward. Although its focus currently is more on this crosses, specifically euro yen. Look in the 4 hour, the 100 period moving average, 138.32, which is very similar. It's the 4 hour 100 period moving average, 138.32, very close to the 20-day moving average. Is a level to watch on top. If you look at the 1 hour chart, we held here the 200-hour moving average, which is currently at 137.85, and the 100-hour, just as a reference, is 137.68. They're both flattening out with a slight tilt up, so you got to watch those levels. This is probably the level that needs to hold to keep the bid, but we seem to be probably a day of watching equities, watching the correlation with the yen, and watching that 138 level. So that's it. One thing, if you look at the bottom of this chart, you'll see the bottom of the video, you're going to see a link to our second quarter Forex and global market survey. The results are quite interesting, especially as the overall outlook has not changed, but the levels cited have been tempered, so the market is not as bearish, bullish, depending on what market you're looking at, as they were when we did the survey at the beginning of the quarter. So this link is embedded. Just click on it and you'll see the survey results.